Here we go. We're about to dig into the accounting equation. So you must remember the accounting equation to succeed in Intro to Accounting. There are two sides to the accounting equation, the left side and the right side. On the left side, we have assets. On the right side, we have liabilities and owner's equity. The left side of the accounting equation must always equal the right side of the accounting equation. That means assets, the left side, will always equal the right side, liabilities plus owner's equity. This is the accounting equation. Assets equals liabilities plus owner's equity. It will always be in balance. We covered what assets and liabilities are in 1.1, but equities can be a bit different and a little bit harder to understand. Equities means the financial right to the assets of a business. There are two types of equities in a business. Equity of those that you owe money, and this is usually called creditors. And it makes sense that they have equity in your business because they did loan you money. The other type of equity is owner's equity, and that's the claim to the assets of the business after all the liabilities are paid off. Today, we're going to be looking at how this accounting equation is affected when a transaction occurs. A transaction occurs anytime there's a business activity that will change assets, liabilities, or owner's equity. This will always affect two accounts. The first transaction that we have is receiving cash investment from the owner of the business. It makes sense that this is the first transaction that we're looking at because we need some sort of assets, or in this case, cash, to start the business. Let's just repeat that first transaction one more time. Receive cash investment from an owner. You can probably pick out some important information. Cash should stand out to you because that's actually what's being received. Cash is going to be the account that will be affected, and since cash is something that we own, we'll know that the account cash is an asset. So let's ask ourselves another question. If we receive cash, does it sound like cash would go up or down? Well, if you receive cash, your cash for your business would go up. So you're right, cash will go up in this instance. The account being our account balance, the account being cash, will increase. We have an asset, cash, that just increased, so now we need to make sure the accounting equation balances. So what's the next account that will be affected for this transaction? It's going to be owner's equity because the owner, and in this case Michael Delgado, has a claim to those assets. So here the account is called Michael Delgado Capital. It looks like the left side, assets, went up, and then the right side, owner's equity, went up as well. So the accounting equation is balanced. Let's take a look at another transaction here. Now we're going to pay cash for supplies. It's important to listen to the transaction because it contains clues. So paid cash for supplies. We have two accounts here, cash and supplies. Now we know that cash is an asset, but what about supplies? Supplies is something that we own as well. So supplies will also be an asset. And you might be thinking right now, how can the accounting equation balance if both the accounts that are affected are assets? Well, cash will go down and supplies will go up. So they even themselves out. The accounting equation still balances and assets went both up and down. The next transaction that we'll look at is paying cash for insurance. So let's repeat that. It's paying cash for insurance. Hopefully you can tell from the last transaction that cash will be involved and it's going to go down because you're paying it. But what about insurance? Well, insurance creates a new account called prepaid insurance. So anytime we have something that's prepaid, it's going to be an asset because it's something that we own and we haven't used yet. It's really common for a company to buy insurance for the entire year, and it's only used when time goes by. So this is just like the previous transaction, pay cash for supplies. Cash is going to go down, and prepaid insurance is going to go up. So we have two more transactions that we're going to look at, and both have to deal with on account. So whenever you hear on account, you should immediately think a liability. Buying something on account means that you'll pay it back later. So this is very common in business. Normally, a company will pay for everything they purchase from a supplier or a vendor at the end of the month. The transaction that we'll look at bought supplies on account from Canyon Office Supplies. So let's hear it again because there's clues there. Bought supplies on account from Canyon Office Supplies. Well, hopefully you pick out that supplies is one of the accounts that will be affected. We also know that supplies is an asset. So if we're buying supplies, that means supplies will increase. The second account that's affected will be called accounts payable. Now, this account is going to track how much we owe somebody else. Accounts payable tracks how much we owe someone else. So in this case, it would be called accounts payable Canyon Office Supplies. We do that so we know that we owe money specifically to Canyon Office Supplies. Now, this is going to be a liability account, and it's located on the right-hand side of the accounting equation. The question we want to ask is, do we owe Canyon Office Supplies more or less money if we purchase supplies from them on account? We're actually going to owe them more money, so the account is going to increase. So now we have an increase on the left side under the supplies account and an increase on the right side, which is accounts payable, Canyon Office Supplies, and the accounting equation is now balanced. The last transaction is paid cash on account to Canyon Office Supplies. So let's pick out the accounts. Cash and accounts payable. Now, if we paid cash, will our cash go up or down? It definitely goes down. We paid it, right? So if we paid money towards what we owed to Canyon Office Supplies, will the account balance, that account payable, go up or down? That also goes down because we now owe them less money. We now have an asset on the left-hand side that's going down, which is cash, and a liability on the right-hand side going down, which is accounts payable. And the accounting equation is in balance. So that's very quickly 5 different accounting transactions and how they affect the accounting equation.